as it relates to closing costs, which is one of the things we wanted to talk about today, how do you pay your closing costs? Are your closing costs included in the loan? There's a couple of different ways to structure that. Probably the most common way to structure the closing costs, because there are going to be costs associated with a loan. With any loan, there's costs associated. If you're not paying them, then someone else is paying them. If it's the lender, it's because you're taking a higher interest rate. So someone's always paying the closing costs. On a cash out refinance, the closing costs are typically included in the loan. And so you'll get cash out. You won't pay for the closing costs. The amount of cash out that you receive will be less, typically by the amount of the closing costs. So it's something that we structure when we're setting up the loan. In terms of the probably most cost-effective way of getting access to cash out, it may be a home equity line of credit. Although it's very hard to get a home equity line of credit these days, there's not a lot of lenders that are offering them, and they are riskier for the bank because they're in the second mortgage position, not the first. People think they're easier to get than a first mortgage, but they're typically a little harder. It's more strict. So when it comes to cash out, home equity line of credit, those sort of things, we'll look over the options for you. Make sure you reach out and we'll share with you which might be the best route for you. See you on the next one.